Good weekend, all. Ira Epstein of Linn Associates with your agriculture update, your weekend edition for Friday, the 16th of August, 2019. Now, what makes the weekend edition different than our Monday through Thursday is we're going to look at longer-term charts. We start with one monthly chart, and then everything else is going to be weekly charts. In summation, the week was all about falling meat prices and falling grain prices. We got new numbers from the USDA survey, and it showed a lot more corn acres than the trade thought. Corn went down about 40 cents just off that report. Beans still down. For the week, though, the market, actually for the month so far, remember, we're only at the 16th. We're halfway in the month. Beans aren't doing bad. They're up 3 cents for the month. You can see the sideways action right through here. As we stepped over to the weekly bar chart, the market pulled down, and now it's just sort of sitting tight. For the week, it's not down much either, down 6.5 cents. The trend is down. You have lower highs, lower lows as measured by the swing line. The swing line study I teach in my charting course, but it's a visual method that when you look at a chart, you know if it's trending or not trending, and if it is trending, definition, lower highs, lower lows being a downtrend. If you were to take out the most recent high, you break that pattern. Well, you'd have to go up to 918 to take that out. Where's the market fighting its battle? It's been fighting its battle. It's been actually doing it for a month and a half at the 18-week average of closes. Remember, this is a weekly chart. You keep hitting that number, you bounced, you hit the number, you fell, and pulled right back to it. It's going back and forth against that number, trying to figure out what next. But as you finish the week out at 867.25, you were over that 18-week average. So even though the trend is down with lower highs, lower lows, it's countered because prices closed over the 18-week average, which defines the bias is up. In terms of these numbers, these are called Bollinger Bands, an algorithm designed to keep the market trading within it. Where the plays come from initially is when the band gets narrower. And then you had your move down, a contra move that actually went through those highs and then pulled back down. It's been a rough time, but rough times are the nature of grains at this time of year. You always have words or trouble planting the crop. Then it's too hot, too cold. We didn't get enough rain. We have too much rain for what's in there. There's always issues. Then the race is on for the harvest, which is yet to come. We're still in that other sector that I said. When you look at right here, you can see in the soybeans, you're just going sideways against the 18-week average, and momentum is pretty sideways. I'm going to call this market pretty flat. Meal's different. It's in a bearish trend. It's got a pattern of lower highs, lower lows. Resistance was pretty well seen by the green line, the 100-week average in the upper Bollinger Band. You'll trade 95% of the time in these black lines. Think of when you first hit it as resistance, when you first hit it support. If the market comes down, look for the support, 788 at this zone, the lower Bollinger Band. Resistance right now, the 18-week average of 304.30, and you break this pattern if you take out 317.30. Soybean oil, it's that tail, it's the other parts of this wild dog. This has been the bullish sector. Higher lows, higher highs, went to its upper Bollinger Band, and what did I just say? You get to those bands, markets run out of steam often. That's what it's doing. Can it go higher? Sure it can. If it does, then the 100-day average comes into play. Let's assume it doesn't go higher. Well, then support's back at the 18-week average at 27.91, and momentum is still pointing up. Corn market down for the week, just about 9.5%. Market has come down hard, though, on everything. It's trying to get its footing against the 100-week average. That number's 372.25. You finished at 371. Let's assume it doesn't get its footing here. Then the next stopping spot could be the lower Bollinger Band, 336.5. What if we get a bounce from here? Well, I think if you had a bounce, you'd see willing sellers probably in this 403.75 zone. And if you got over the 417 area, I think that those that are bearish would start scratching and going, what's really going on here? But you got a ways to go. First resistance point right up through there. In the wheat market, you see the 100-day average in green, 100-week average, and the 18-week average in red. The market finished off at 470.75 under both. The pattern is one of lower highs. I've marked them with the arrows, certainly lower lows. Trend down, bias down, momentum down. I think willing sellers are probably in this area of those two averages, and you'd have to get over that last rally high to knock them out of their game. In the cocoa, this is a market that's in a free fall right now, and away you're going. Now, we did this before. We got down into these levels. Is that what it's telling us? Don't know. But I can tell you, lower highs, lower lows, momentum pointing down. The market's ahead of itself in that it's underneath the Bollinger Band. You only spend 5% of the time under or over a band. You can see here when you did it, you popped back. I can go time and time again on the chart. So caution to the short there. In the sugar market, the market keeps failing to punch through the lower Bollinger Band, but the trend is down. Lower highs, lower lows, you're settling under the 18-week average and momentum pointing down. So it's a grind on the sugar, but it's a grind, and it is still very much in the bear trend. You'd have to take out this 1230 level to negate that pattern, then I think you'd take another look at the chart. Coffee, a swoop. You've just come from the 113 area down to 92, and you should go to Starbucks and tell them, where's your break on raw materials? They're not, when coffee gets really high, they use the excuse always of, I'm raising my price because of my raw material. But when it goes down, I've never seen them lower their price back. If you do, correct me. I just don't see it. Lower highs, but you have a higher high, lower low, momentum down, bias down, not a tradable market. When you get straight line markets, where do you put a stop on it? In the cotton, still very much in the bear camp, lower highs, lower lows, momentum flattening out right here, so be a bit cautious. The market was up for the week, saying maybe it wants to rally a little bit more, but the trend is still down. Cattle market down 7.5% this week, still falling out of bed. The trend has been down, lower highs, lower lows. We had this one move up, if you'll remember. It was an outside week. Then what we had is we took that low out, and that set up this trap, and you're down to new lows. Hogs down 21.5% this week. So if you think China's buying our pork, duh. They may be buying little bits of it, but not enough of it, and down and away you go. It's painful for the farmer out there right now. But I talk about that, and I talk about a lot more every morning. You know, when I entered this business, the one thing we had was different than today. I could go from door to door and I'd find 30 technicians in this office, 20 at that. It was a camaraderie. You don't have any of that. And, you know, you go on the internet, you get a certain thing, but from who? Who's saying it? You know, I watch our own blog on the YouTube channel we put up, and you get some pretty crazy ideas out there. It's why I rarely answer one way or the other. To make it simple, I come in the morning, and first thing I do, I want this out before 7 a.m. Central Daylight Time. I want to give you what I'm seeing in the charts. And in this, I'm going to tell you where I think you should buy, where I think you should sell, where I'm wrong, where I'm right. It is meant for the swing trader. I'm not trying to day trade. I'm trying to catch a push in the market. That's basically what it's about. And I'm going to cover, as I said, 40 futures markets and 5 ETFs. The idea is to give you some extra confidence on your own chart analysis. There'll be a bar on the bottom of the video. Just pull it. You want to go to the meats? Slide it there. You want the metals? Slide it to that bar. It'll take you right where you want to go, when you want to go there, and there's a lexicon on the side as well. Time is your friend on that, and that's how we do it. This is a subscription service, and how I charge for it is to get you started, and you make up your mind. It fits you, it doesn't. 26.5 cents a day, or $7.95 for the first 30 days. Come on. It's basically, I'm saying, if you're serious, I'll give you that price. After that, the price goes up to $15 for every 30 days, but if you decide you want to do a 1-year non-refundable subscription at any time, you can go for $156, which is $13 a month, and we have a lot of people that do that. First off, it's almost every day. I was on vacation week, and I did them when I was gone. Where do you find this and all the info? Because you sign up online, www.iraepstein.com. When you go to our new website, you'll see how it works. You get around it, but it'll be under education or research. You can click right into those areas. You'll see Ira's morning subscriber video. Click it, it explains it, and your sign-up page is right there, plus a fact sheet explaining how it all works. One other thing, included in every subscription, free, is this. And what this is my application. So the app will work on a smartphone or an Android. It's quotes, it's charts, it's news, it's oral commentaries from a number of people. I think you're going to be blown away. Free. It's a $40 a month value. Free is what I just told you, included in the subscription. So I think you'll find it neat. When I put it out, by the way, the videos, you'll get a push notification, not a text. It's free. Click it. That's all. The videos will play. Whatever I've got for you, it'll play automatically right there. I'm Ira. You have a great weekend. I'll see you.